Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, September the 20th, the year 2018. Let's talk trading. And do you trade? Well, I know that might seem like a silly question, but I mean, really, do you trade? Maybe a better question is, do you trade with real money? Because trading, number one, you need to have some skin in the game, i.e., money. And number two, unless you're taking certain steps, you're not really trading. You're gambling. Um, Especially if you're not employing money and risk management, you're just gambling. In other words, you buy a lot or a mini lot or a micro lot. Doesn't matter. You pick a pair, you buy a lot, and then you sit back and you wait. And then maybe you get a chance to take profit and you do. Maybe you never get a chance to take profit and you just sit there and you watch. And all of a sudden, your account is just draining. That's not really trading. It's not the way it works. So just answer that question. Do you trade? Are you really engaged in trading? Now, trading can be many things to many people. We got the squiggly line brigade out there, using squiggly lines to trade, but chances are some of them might actually be trading. So, me and horizontal lines. Well, remember we had the euro yen actually had gotten back here, and actually it was in the body for a while, and then it came back in the wick, and you see it popped out of the wick, and right now it's 76 pips, 77 pips above the wick, and 29 off the high. So there was over 100 pips to be had taking that trade right there from the 131.09 level. And you see right here, once again on the week, 131.10 level, real close to the monthly, right, from last week. See, once again, you'd be up 77 pips, 78 pips, taking that breakout. Now, those of you just tuning in right now, pound dollar is the only one that has not filled the gap. But you can see here, once again, that very, very simple trade on the week. Now, let's take a look at the day. You see here on the day, had you just taken the breakout of the previous day, you'd be up 22 pips with the potential of what, 48? Tell me that wouldn't have been a nice trade. And let's see, on the daily, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Above 100 pip on the range. Euro yen clocking in at 125 compared to the dollar yen at 29. You see, part of trading is paying attention to what you're trading. Okay? Even though it's not what you trade, it's how you trade it. Okay? I say that at the end of all the videos. But with the what is, we're trading Forex. Well, what pair? If this pair right here, it's only moving 29 pips, but this one's moving 125, which one has more opportunity to make money? I mean, that's obvious, right? Obvious. So, part of trading is picking what's obvious, what's obviously moving versus what isn't. And I do that using frequency distributions. When all of a sudden you see the frequency distribution start to shift to the lower side, then you're saying, hey, wait a minute, how many times does this go over 100 pips daily? What? It's not doing it anymore, or it's rarely doing it, but this other pair is doing it on a regular recurring basis. It's a no-brainer which pair you pick to trade. At least to me, it's a no-brainer. Okay, you see a buy zone trade right here. It hit The pivot point, not, between here and here was about 13 pips between the pivot point and the open. Just gaming for that pivot. That was profitable. Right here you see a touch, another touch. This is a scratch trade, or if you were, now let's see, there's the open. So no, you never should have been long there. So basically, those could have been scratches or losses. Right here is another test. You see here, it came back right through, crossed that wick, going against the trade. Just scratch that trade right there. Just scratch it. Don't. And hey, if it were to continue, so what? Sometimes you just scratch the trade and you wish you hadn't. But it's much better to scratch and wish you hadn't than to not scratch and wish you had. Would that make a good t-shirt? Better to scratch. Oh, that could be taken in so many ways. Anyway, here, you had an opportunity here or here to get long and go for the big ride. Oh, yeah, okay, Harry hindsight. No, not really, because these lines were drawn here at the very first tick of the day, so we knew where the triggers were. It's just whether or not you took them. And you see here, we have a nice rat zone happening here for the red rats. There was a couple of opportunities here, just trading out of that zone, picking up a handful of pips along the way, and just that simple. Once again, we hit the pivot. The weekly pivot's down here. Looks like we're moving away from that weekly pivot. We've already hit monthly R1, weekly R1. So it looks like it's stalling. It may return, but it hasn't returned yet. Once again, we took out the pivot on the daily. Now you see here, there was another missed pivot, but I think if I remember correctly, the way this indicator works, it only looks back 100 bars. But since this is daily, we'll up the bar count and see what we get here. Nope. Oh, I believe that other pivot was somewhere way over here. Let's look. We're at the 131. Okay. We don't have the pivot value here. I guess it didn't really matter. At least I didn't think it mattered when I built that indicator. I still don't think it really matters. But I think didn't we have a May pivot? That's what it was. There was a May pivot. We took it out. So one of these May pivots right here, it was probably, I don't remember, but it was one of these May pivots. So see, we reduced that. Price action. One ball at the line, or one ball here, one ball at the top, red at the line short, one ball at the bottom, green at the line long, 3 ball at the top, red at the line short. Once again, very simple. This is trading. We do it. If you do something like this, this is trading. Why? You have a method. You have a defined method. You're not just quote unquote guessing. You're making calculated risk. You employ your money management. You take profit. You know, if you have a 3 ball, you might get more than one. If you have a 1 ball, be happy with anything that's positive. If you have a 2 ball, you might shoot for 1 being, line 1 being how many lines you actually hit. So right here you had a 2 ball, and so you would have hit. You would have entered here, so that was 1, 2, 3 lines. See here, 3 ball, 1, 2 lines. So, but on the 1 ball, you can see here, you had 1 line. Okay, right here, you didn't even have a line. Right there, that was probably a scratch trade if you took that one again. So, once again, we have a method. We We have entry. We know about where to exit. We even, if you're using the spread dots indicator, you're usually timing your entries. You can see here we've got buying going on, indicator signal. See, there was selling, it reversed to buying. You could have been out of that trade and taking the lion's share. Okay, here we go. The previous daily sessions lines, trading with candle color at the line. And you can see here, this is for the high, close, close, low from the previous day. So you can see here, well, it's minus 32 because it's the previous high minus the close. So it's actually 31 pips above the high, and then the close low. So I had to keep it consistent, even though you'd say, well, wait a minute, isn't it profitable when you be in the money? Yeah, but when you do the math here, it's the same as here. We want to know how many pips that it's returned. But in this case, it's going the other way because it's a breakout. So you just have to be able to know that means you're 30 pips above. And this means you're 121 pips above. And you can see here, we've got a holo situation for the euro yen. Wick zone, you can see here, very narrow, in and out, in and out, in and out. A nice run past the 132 level here. In fact, what did we hit as a high? 132.15. We just talked about the holo right here, Randy real time opportunity, but we have green candle, so you might just want to wait. You got another 20 minutes. You might just want to wait and see what happens rather than rush in that trade. Because see, when you're trading, you're patient. When you're gambling, you just throw your money in anytime. Doesn't matter. It's like walking in. You know, as soon as the wheel stops spinning and it's payout, then you can start placing your bets. Inventory reduction bar, here you go. There's a long trigger there, a long trigger here. We put in a short trigger. We haven't triggered a short yet. And you can see down here, there's a couple other short triggers were put in. And using the previous daily, weekly, monthly, open, high, and low, once again, you see here we broke across the previous day's high. Here was monthly and weekly highs we broke across right there. Now you see, once again, very simple stuff. And you can see here we're on a buying spree right now. Going to test that one, testing that 132.00 number there. You can see here just a little movement to the upside, not by, well, actually, yeah, that's about 10 pip move right here. The chart's scrunched because I have this line plotting. And the Einstein line, actually this is from yesterday's. But you see here, you just plot a horizontal line on the chart. Price returned to this level. You see it came out. See, price is going to move. So from relative where I opened that chart, if I've been sitting there all yesterday, all night, all morning, you see here, I still could have played that one line like a buy zone and taken the trades, and look what would have happened. You see, it really is that simple. So, fellow traders, it's important to ask yourself, do you trade? Do you really trade? Or are you just throwing your money at something? You know, are you even using real money? But no matter what, it's not what you trade. It's how you trade it. So, it's Thursday. Continue the draining of the banks.